Welcome to the Wednesday edition of the Tech Stocks Daily Podcast. Today, we're diving into Apple's intriguing financial tapestry with stellar long-term returns and its dance with the EU over hefty App Store fines. We'll see if these happenings make Apple a buy, sell, or hold. Then spotlights on IBM, set to unveil Q1 earnings while hyping up their AI prowess with the Z17 mainframe. Are they poised for a remarkable comeback? Finally, we'll splash into Fortinet's cybersecurity triumph, getting GovRAMP clearance and gearing up government tech defenses. Whether you're a stock sleuth or a tech trendsetter, today's episode's got the buzz you need. Let's jump in. All right, folks, grab your iPhones, or maybe think twice before upgrading, as today we're diving into the Apple headlines that got everyone buzzing. First off, if you bought Apple stock 10 years ago, you're probably reclining in your elaborate ergonomic chair, basking in your financial foresight. Apple has ripped ahead of the market with a cool 20.14% average annual return over the past decade. Imagine stuffing $100 into your old piggy bank called Apple stock a decade ago. Yep, that'd transform into about 667 cents today. That's compound interest doing its magic like a tiny capitalist wizard. But as they say, the gravity that pulls companies mighty high could sometimes be followed by tiny speed bumps. Apple's got a fine pickle to get out of after being slapped with a juicy $570 million fine by the European Union. Why? They played the gatekeeper with app developers, restricting them from advertising outside App Store promotions and shutting rival app stores out. All because of that rigorous Digital Markets Act from the EU. Now here's where it gets even more tangled. Apple has 60 days to tweak its modus operandi to align with those EU rules, or they could be facing even pricier penalties. Plus, they aren't alone. Meta's been caught in a related ringer and has to dole out a $230 million fine under similar regulations. It's no secret, Apple's innovation engines hinted at a little sputter. The iPhone doesn't have the excitement of unboxing a mystery-packed gadget because recent models haven't seen eye-popping innovations in a while. Things have hit another level of sticky due to economic pressures with tariffs, looming semiconductor-related charges, and inflation, making the once easily scalable profit mountain now feel a little trickier to climb. Regarding pricing, Apple's valuation still shoots for the stars, comfortably catering to an audience invested more in its brand than some of its hard financial ripples right now. Yet, unlike days of old where you could expect an annual earnings revelry, the party seems to have dialed back the BPM on Apple playlists according to future growth predictions centered on single-digit revenue augmentations. So there you have it, a headline cocktail of high financial tales, a sobering EU dance, and a strategic calculation around iPhone placement unraveling before us. Should investors switch gears or hang tight in their iPods playlists, playing tracks just a little bit sleepier than yesteryear? We'll see. But that's why Apple's in our takeaway bag today. Hold on as we tap into more news around those NASDAQ market movers next. Hey tech enthusiasts, today's spotlight is on none other than International Business Machines Corporation, or as we all fondly know it, IBM. This tech titan is gearing up for a significant moment, the release of its first quarter earnings, and the excitement or nerves are palpable. So let's dig into what the buzz is all about. First things first, IBM is set to report its Q1 earnings post-market close, and analysts are sharpening their pencils as they forecast the figures. They're expecting IBM to reveal first quarter revenue of approximately $14.40 billion, slightly down from $14.46 billion this time last year. Earnings per share are predicted at $1.40, a tad lower than last year's $1.68 per share. But there's no need to sound the alarms just yet. This is a company that has a knack for beating estimates, having done so in 8 of the last 10 quarters. So who knows, they might just pull another ace out of their sleeve. AI seems to be IBM's knight in shining armor this quarter. They're banking on their burgeoning AI business segments, and fresh off their product launch pad is the IBM Z17 mainframe. This powerhouse blends AI features snugly into its hardware and software, ready to handle hefty AI workloads and real-time processing needs. Although the Z17 will hit the market in June 2025, it's already causing ripples in the AI space with its futuristic capabilities. But that's not all. IBM's been busy broadening its cloud services in Canada with a strategy designed to harness exponential AI-powered growth across North America. It's impressive how they're planning to help Canadian businesses with secure, local cloud solutions. Keeping data in-country is a masterstroke considering today's regulatory environment. Adding a splash of M&A magic, IBM has snapped up Hakoda Inc. This acquisition is expected to bolster their consulting business specifically for data transformation services, something that neatly expands their already strong AI and cloud consulting domain. Shifting to the stock floor, IBM's stock is in a bit of a mix. Despite being up a dazzling 32.22% over the past year, the stock's taken a breather, slipping 3.04% this past month. Analysts are divided on this one, with overall consensus ratings teetering between an outperform with price targets that see an upside, and some hesitation marked by current prices skimming the 50-day moving average. The best part in all this? Analysts like Daniel Ives and others see IBM as poised for some exciting opportunities come 2025, especially within the AI and cloud landscapes. Bearing in mind its recent strong performance and future potential, it's no wonder IBM's captivating attention across Wall Street. In essence, IBM is its usual cocktail of potential with a splash of innovation and a twist of market intrigue. Whether you see it as a bulldozer in AI evolution or as the old faithful of the software space is entirely up to you. Either way, all eyes are peeled as IBM gets ready to light up financial news segments tomorrow. Hey tech enthusiasts, today we're diving into the cyber seas with Fortinet, the big kahuna of cybersecurity. So what's got Fortinet making waves on the NASDAQ today? Well, they've just scored a major win with GovRAMP authorization at a moderate impact level. That's right, Fortinet's FortiGuard AI-powered security services and FortiCare services have been given the green light from the Government Risk and Authorization Management Program, better known as GovRAMP. So, what does this mean in the cybersecurity universe? Essentially, GovRAMP sets the bar for cybersecurity tech delivery, especially when it comes to serving state and local government organizations. Getting this authorization means Fortinet solutions have been recognized for meeting high standards of security, keeping public sector entities like local government agencies and schools safe from digital threats. That's not just a gold star on their report card. It's a testament to the robust threat intelligence and security support Fortinet offers. John Whittle, Fortinet's chief operating officer, summed it up perfectly, saying this milestone underscores their commitment to delivering trusted security to state and local govs. It's like giving the public sector a superhero cape and maybe a trusty utility belt of cyber tools. The cherry on top? FortiGuard services are not just about fending off today's threats. They're geared to detect and zap never-seen-before threats straight out of a cyber horror movie. Constantly updated, these services include intel from Fortinet's vast network of sensors and security brains. It's like having a non-stop stream of cyber defense data pouring straight into your security team's utility belt. The authorization is a big step for Fortinet, especially for government agencies that might not have cybersecurity maestros in their ranks. FortiCare's support services are like having a digital Sherlock Holmes on call, ready to assist 24/7 with over 1,900 experts in their corner. By meeting standards set out by the National Institute of Standards and Technology and undergoing a solid independent audit, Fortinet isn't just resting on its laurels. Nope, they're even eyeing FedRAMP certification, proving there's no stopping this cybersecurity juggernaut from serving government entities with top-tier solutions. Got any thoughts on Fortinet's latest achievement? Do you think this move makes a significant impact on public sector cybersecurity? Are the threats out there warranting such rigorous certification? Drop your thoughts, musings, and questions in the comments section below. I'd love to hear what you think. All right, for today's market funfair, let's take a deep dive into everyone's favorite overachiever, Apple. Given today's news cocktail, you're probably eyeing whether you should be hitting that buy, sell, or hold button. So let's sashay through the details. Apple's been draped in a little bit of both relic-worthy glory and modern-day kerfuffle. On the one hand, we've got that impressive 20.14% average annual return over the past decade. Investors who've been hanging on to Apple like a rock concert ticket, they've seen some serious rock and roll in their portfolios, with $100 investments back then magically turning into over $616 today. Hello, compound interest. But there could be clouds in Cupertino. The EU has slapped Apple with a rather unflattering $570 million fine over their restrictive App Store rules. That's a sizable hiccup to iron out fast. Not to mention that persistent shadow of a threat with potential additional penalties looming if they don't comply with the Digital Markets Act within 60 days. Ouch. We also can't gloss over the quiet whispers in Apple's recent innovation runway. While they're still dazzling with a brand valuation shooting for the stars, the Mac and iPhone crowd seems a bit less giddy these days, thanks to a streak of less mind-blowing updates and models. Throw in economic stress involving tariffs and inflation, and it's enough to want your iPad to cue some worry-free chill vibes instead. For investors, the decision then is a tapestry of vibes: alluring long-term growth history, immediate regulatory challenges, and lower near-term growth expectations. My gut from this news brew? I'd place Apple as a hold. Why? Because despite the hurdles, they've got a formidable brand love affair operational, likely to ride out the storm, not to mention those announced single-digit revenue augmentations floating alongside the iClouds. Plus, regulatory spats and hiccups on the innovation runway are cycles tech giants like Apple have navigated with finesse before. Still, in stocklands where you don't usually meet an Apple without a few hypothetical worms, I'd say especially with this game of buy, sell, hold. Always do your own research. Keep tabs on Apple's strategies and roadmap, and assess your investment horizon, and maybe have a muse session with your financier on speed dial. Over to you, adventure seekers. It's been quite the whirlwind on the NASDAQ today. From Apple basking in past market glory while dancing the regulatory cha-cha in the EU, to IBM gearing up to prove its mettle with impressive AI innovations in their upcoming earnings report, and Fortinet leveling up its cybersecurity crusade with GovRAMP authorization, each tech titan has left its unique mark. As we ride the waves of innovation, market speculation, and regulatory challenges, remember that these narratives can shape tomorrow's headlines. If you enjoyed our tech dive, smash that like button, subscribe for more doses of tech tales, and share the buzz with your fellow tech aficionados. Stick around for tomorrow's roundup. Who knows what surprises await in the techiverse?